Welcome back, wise investors, to the Dividend Uncle channel. Today, we've got something special in store for you. The stock market has been on a roller coaster lately, primarily due to concerns about rising interest rates. As a result, even some of the best blue-chip real estate investment trusts, or REITs, have been dragged down. But guess what? Behind this market turbulence, there's a silver lining. While many blue-chip REITs are now trading at or near their 52-week lows, their fundamentals remain rock solid. This presents an incredible opportunity for long-term investors to grab some real bargains. In this episode, we're going to shine a spotlight on 3 such hidden gems that I believe have been unfairly sold down. These are blue-chip REITs that you can confidently buy and hold forever. I will also explain why I think the business fundamentals of each of these REITs are expected to remain robust despite the current market volatility. The first one is Capitaland Integrated Commercial Trust, or CICT. It is a real estate investment trust that primarily focuses on owning and managing a diversified portfolio of commercial properties in Singapore, including office spaces, integrated developments, and retail spaces. I think that you can confidently buy and hold this REIT forever because of the following reasons. Stable occupancy and reversions. Capitaland Integrated Commercial Trust boasts an impressive portfolio occupancy rate, which inched up to 96.7% in the recent quarter. The office segment, in particular, showed remarkable growth. This stability in occupancy indicates continued strong demand for its properties, especially in the office and integrated development sectors. Resilient tenant sales. The trust has recorded a 6% year-on-year increase in tenant sales, driven mainly by downtown malls. This demonstrates the resilience of their properties, particularly in prime locations, which continue to attract consumers and businesses. AEI opportunities. Capitaland Integrated Commercial Trust's proactive approach to asset enhancement initiatives, or AEI, bodes well for future income growth. With plans for its properties such as Clarke Quay and Galileo, there's potential for increased rental income after the enhancements for these projects are completed. Diverse portfolio. The diverse mix of office, retail, and integrated development spreads the risk, making Capitaland Integrated Commercial Trust less susceptible to economic fluctuations in a single sector. For instance, the retail sector and the office sector tend to move in different tunes. Next up, we have Frasers Logistics and Commercial Trust, or FLCT. Frasers Logistics and Commercial Trust is a REIT that specializes in owning and managing a portfolio of logistics and industrial properties, as well as commercial properties across various countries, including Australia, the UK, and Europe. I also think that you can confidently buy and hold this REIT forever because of the following reasons. Strong rental reversions. Frasers Logistics and Commercial Trust's impressive rental reversions, especially in its logistics and industrial, or L&I, portfolio, highlight its resilience. With 21.4% rental reversions, it reflects the trust's ability to capture the benefits of strong market rental growth. Occupancy levels. Frasers Logistics and Commercial Trust has successfully maintained high occupancy levels, with overall portfolio occupancy at 96.2%. The rising occupancy in its UK properties also points towards sustained demand. Demand for quality. The trend of prospective tenants seeking quality spaces is beneficial for Frasers Logistics and Commercial Trust, which can capitalize on its well-managed properties. Financial stability and risk management. In my earlier videos, I mentioned that Frasers Logistics and Commercial Trust has one of the lowest gearing ratio of about 29%, and is definitely a good choice if you are concerned about the impact of interest rates on REITs. The trust's prudent hedging strategy, with 75.4% of its borrowings hedged, further shields it from abrupt interest rate increases. Last but not least, we have Capitaland Asset Trust, or CLAS. This REIT primarily invests in a diverse range of serviced residences, rental housing properties, and other hospitality assets across multiple countries, including Singapore, Australia, the UK, and the US. This is the third REIT that I think you can buy and hold forever because of the following reasons. Diverse geographical exposure. Capitaland Asset Trust properties are spread across various countries, including Australia, Singapore, the UK, and the US. This geographical diversification helps mitigate risks associated with a downturn in any single market. Recovery of pre-COVID levels. Despite the uncertainties surrounding the COVID-19 pandemic, Capitaland Asset Trust's portfolio has shown resilience, with RevPAR reaching 98% of pre-COVID levels. Markets such as Australia, Singapore, the UK, and the US have even surpassed pre-COVID levels, indicating a strong recovery. Long-stay segment. Capital and asset trusts focus on the long-stay segment, which has contributed significantly to gross profits, is a strategic advantage. This segment is less sensitive to short-term economic fluctuations. Continuous AEI. The trust's commitment to ongoing asset enhancement initiatives ensures that they can extract additional value from their properties, potentially leading to increased rental income and property values. In summary, these blue-chip REITs have demonstrated their resilience through stable occupancy rates, strong rental reversions, and prudent risk management strategies. Their diverse portfolios, strategic initiatives, and geographical spread position them well to weather market volatility and continue delivering strong business fundamentals for investors. Remember, the best opportunities often come when others are fearful. These REITs offer long-term potential and stability, making them ideal candidates for your forever portfolio. As always, conduct your due diligence, consider your investment horizon, and consult with a financial advisor if needed. If you found this information valuable, don't forget to give this video a thumbs up and subscribe for more insightful financial content. And if you have any questions or insights, please share them in the comments below. Until next time, stay wise and invest well.